Next, we have an exciting panel, Corporate Adoption, moderated by Jeff Walton, founder of MSTR True North. Joining him are Dylan LeClair, Director of Bitcoin Strategy at MetaPlanet, Paul Giordano, VP of Digital Asset Management at Mara, Eric Semler, Chairman at Semler Scientific, and Brian Abely, Investment Strategist at Fidelity Digital Asset Management. Please join me and welcome the panelists.
All right, is this thing on? Can people hear me? Yeah? Okay, here we go. All right, here we go. You guys ready? Let's do this. Okay, so we are here today to talk about the biggest story in all of finance, which is corporate adoption of Bitcoin and the development and the evolution of a Bitcoin treasury strategy. So as he mentioned here, we've got Paul Giordano of Mara, which runs digital asset compute at a mining company, Mara. They are the second largest holder of Bitcoin. We got Dylan LeClair at MetaPlanet, and he is the director of Bitcoin strategy. And MetaPlanet is a Japanese Bitcoin securities company, really, at this point. And Eric Semler, Semler Scientific, and Eric is the chairman of Semler Scientific. Semler is a healthcare provider and also running a Bitcoin treasury strategy, which they've evolved over the last year. And Brian Abely of Fidelity, which is the director of investment strategy of digital assets. And Fidelity is the third largest asset manager on the planet. So very, very great panel here to talk about. So I wanted to lay the groundwork here. Like, why are we here? Why are we talking about this? So of the companies that are represented here today on the panel and with Fong at Strategy, the companies represented here today hold 583,000 Bitcoin, which is 2.7% of the Bitcoin supply that will ever exist, right? So it's an incredibly huge statistic. On top of that, the companies represented here today have acquired 378,000 Bitcoin in the last 16 months. I'm gonna say that again, 378,000 Bitcoin in the last 16 months. This is roughly 2 times the newly minted Bitcoin supply in the last 16 months. So these companies are on an absolute tear, accumulating Bitcoin like none other, right? And so the reason I point out the statistic is just to emphasize the evolution here, right? If you've got these 4 or 5 companies that are accumulating more than 2 times of the newly minted Bitcoin supply, that means somebody's selling it. And we've got corporate adoption that's beginning to take over in the evolution of the Bitcoin ecosystem, the Bitcoin network. So I think this will lay the groundwork for the future here. So enough about me and over to these guys. So the first question I have, and we'll pass it along here, is why are corporations adopting a Bitcoin treasury strategy, and how did we get here? I'll pass it to you, Dylan.
Sure, I'll start it off. Can you hear me?
Yeah.
I think the realization for us, and I think the realization that many people are starting to have, is that Bitcoin is the unit of account. Bitcoin, it's the hurdle rate that you want to be measuring against. In a world where every central bank and government on a long enough time frame is devaluing the currency and increasing the amount of units in the supply, it's purely just a math equation of what do you want to own. This is why gold has been, the gold standard existed for hundreds of years, thousands of years, because of its monetary properties. And so, I'm not going to do the whole spiel, but everybody knows, everybody here knows why Bitcoin is that asset. So the natural, sort of progression started by MicroStrategy, now Strategy, is realizing that the only game in town is acquiring as much as you can if that's the world we're going into. I think that was a really bold leap in 2020, and maybe it still is today, but not so much. And I think 10 years from now, every public company on the planet has some Bitcoin. And that will determine the winners and losers in many ways.
Right, and now we've got, 175 public and private companies that have explicitly announced that they're holding Bitcoin. Right, we've got a couple very large big movers that are moving here, and maybe we'll kick it over to you, Eric.
Sure, agree with all of that. I'd say I came at it from a different perspective in that I've been an investor in the stock market for 30 years, and the last stretch of my career, I've been an activist going on company boards, and 2 years ago, I went on the board of Semler Scientific. I wasn't happy with the way things were going, half of their market cap. was in cash, which is similar to where MicroStrategy was in August 20. I'll say strategy, sorry. But the thing is, my whole MO as an investor and as being on company boards is to maximize shareholder value. So we spent a lot of time looking at ways to maximize shareholder value and really couldn't find anything as kind of crystal clear, huge upside opportunity other than Bitcoin. We looked at so many acquisitions and decided that Bitcoin was really the answer for us, especially with all the cash we had on our balance sheet. And I think Strategy's playbook and success really fortified us in that way. But we came at it more as, how are we going to maximize shareholder value? We have all this cash, can't find a great business that has such a clear path to a high return, and Bitcoin kind of was the solution. And we were clearly a zombie company that needed to kind of become awakened, and Bitcoin allowed us to do that.
Yeah, it's this form of desperation that has led to the eventual solution or the outcome being Bitcoin. Yeah.
Right.
Excellent. Maybe we'll pass it over to Paul Giordano, and we'll go there, and then Brian will loop you in. Yeah, we'll loop you in.
So from Mars' point of view, as a Bitcoin miner, we're looking at also being a public company. As Eric mentioned, we have a fiduciary responsibility to maximize our shareholder value, and we are constantly looking at ways of growing our Bitcoin balance, either through mining and investing in new mining equipment and investing in new forms of energy to power those miners. Or
just turn that on. I'm sorry. There's a switch on the bottom.
On the bottom.
Is that better? Should I start over? So as I was saying, we're constantly evaluating how to invest our shareholder dollars into more efficient mining equipment, lower energy costs, or going right into the market and buying Bitcoin and building our treasury that way. The performance of Bitcoin over the past 15 years, I think, speaks for itself. It's the best performing asset in the world. It's up 150% annualized, and it needs to be part of every treasury if you want to balance the effects of weakening dollar and sort of, as we're seeing, sort of global upheaval of things that could happen with your assets. So we balance that by having as much Bitcoin as we can, trying to generate Bitcoin at the lowest dollar per coin and build our treasury that way.
Yeah, perfect. And so now that we've got the view of three companies that are running a Bitcoin treasury strategy, Brian, I'd love your perspective, given that you see the whole landscape, right? And you see the 30,000-foot view. What are you seeing a little bit more broadly in the market?
Yeah, thanks, Jeff. Again, Brian, investment strategist for Fidelity Digital Asset Management. Fidelity, we're headquartered right across the river in downtown Boston, and we're very proud to have been involved in Bitcoin for a number of years at this point, going back to research in our Fidelity Center for Applied Technology nearly a decade ago at this point. The two different entities we have that focus on this topic is a custody offering called Fidelity Digital Assets, where entities can go and buy Bitcoin directly. Then we also have an asset management business that has solutions related to Bitcoin in varying capacities as well. What's interesting is I think we're just over a year away from the SEC's approval of the spot Bitcoin ETPs. And there's a lot of really interesting details and nuggets in terms of the adoption or views of Bitcoin as an asset from a whole variety of different population investor sets when you look at the data in terms of who's using the products and in what capacity. What I think that a large effect of that approval in the products was again, it reduced the complexity for a lot of different investors over how to get price exposure to an asset like Bitcoin through a traditional brokerage account, but more so, just kind of put the impetus or maybe made more social acceptance around thinking about it as an investable asset that you want to hold, and has it caused a lot of different entities, across the financial spectrum to just kind of ask themselves, why, or maybe re-engage in kind of an intellectual discussion over why something like this matters, and is it something that they want to participate in varying capacities.
Yeah, love the perspective. This is a perfect segue, right? So January 11th, 2024, the spot Bitcoin ETF was approved. And now, as of today, ETFs hold 1.29 million Bitcoin. So that's 6.1% of the Bitcoin supply that will ever exist. And whereas corporations, including governments and nation states across the globe, hold 1.5 million Bitcoin, which is around 7.3% of Bitcoin supply. So I think that's an interesting perspective you bring here, Brian, especially in light of the recent market environment we've had the last 2 days and the last week, right? With the introduction of tariffs, we've seen the market broadly sell off over the last 2 days, yet we've seen relative Bitcoin strength and relative strength from Bitcoin treasury companies. So I would love to get your guys' perspective on, why is this important in the market, and how do we see this going? I mean, I know many people are reluctant to run around and say this is a decoupling, but it's a very interesting data point that we're seeing in the market. Maybe we'll start with you, Dylan.
Yeah, my view on it is that everybody for the longest time said Bitcoin is uncorrelated, is an uncorrelated asset, and then the past year or two, or maybe the ETFs have really increased the correlation. And some people are saying it's not a hedge or it's not a new system, it's just the levered Nasdaq. My view is that actually the correlation is not a bad thing. It's a natural development. If you expect something to go from 0 to $200 trillion, it's going to ebb and flow with the global liquidity tide. But I think that there's going to be instances. Friday was an example. In the future, there'll be a day or a week or a month or periods of time where there won't be a correlation, and there'll be an inverse correlation. And earnings risks, tariff risks, jurisdictional risks, sanction risk, inflation risk, counterparty risk, all of these things that Bitcoin doesn't have, maybe an ETF does or a corporation does, but holding it in a cold storage doesn't. All of these global institutions and investors are realizing that this is the reason they should not own zero Bitcoin. So something like this wipes off 6% on the Nasdaq on Friday, and IBIT is up 2%. Right? That's 800 basis point outperformance in one day, right? So maybe it doesn't decouple for the next week or the next quarter, but just that day of outperformance made someone's quarterly return. So I think that that's where kind of I think or how I think about it. Correlation's not a bad thing; it's going to continue, but it's just these blips of outperformance that really make the difference over a long time horizon.
For me, this is just the holy grail. It's the crux of my investment thesis. Watch gold just take off. It's the disparity between gold and Bitcoin now is as wide as I've seen it. I think it's 21 trillion now versus $1.5 trillion. And so that just reinforces why you would own Bitcoin here. I think secondly, as a portfolio manager, I look at Meta and Amazon and all the issues around these stocks and the cash flows, how much are their earnings going to miss by, et cetera. Then I look at Bitcoin and I'm like, it can't be tariffed. Bitcoin can't be tariffed. There's no earnings date. We don't have a quarterly release. We don't have to go through that anxiety. Is there anything else I can own in the market besides Bitcoin? Maybe gold, which has worked well, but gold was down 3% at one point on Friday, and Bitcoin I'm sure will be down 3% sometime in the near future, in an hour or whatever. But I think this is a really positive sign. It's just it's obviously such a short-term data point, but I think that's the holy grail. And God, if we could ride through the storm and Bitcoin is really what comes out as a leader, I think that will just be massive for what all of us are trying to achieve.
Yeah, like anyone in this room, right? I looked at the performance of Bitcoin relative to other risk assets on Friday and thought it was interesting to say the least. However, I think it's quite a bit of a stretch to extrapolate one data point into a longer extended trend. Would also suggest, again, if you put yourselves in the shoes of a financial advisor, right, that is managing life savings for families that hire them to perform that service, right? They're trying to address concerns over like the broad sell-off in U.S. risk assets. That's probably not an entity that's going to try to proactively insert like Bitcoin into that type of conversation. Although people in this room may have varying opinions about that. If it's a trend that extrapolates or continues, which remains to be seen, obviously, right, there'll be a really interesting data point and trend to monitor going forward.
Yeah, I'm not ready to call the non-correlation of Bitcoin as sort of self-fulfilling just yet. I mean, I hope we get there, and I think that we should be getting there. I think during times of market stress, you see the worst performing assets are the ones where managers can raise cash very, very quickly because they have high valuations or they have high concentrations to that specific asset. And I think that you're seeing in the market a lot of delevering of sort of the widely held names that were just mentioned, the Mag 7, Amazon, et cetera. I don't think anyone has a large enough position in Bitcoin to be able to raise a lot of money in a time of stress, and that's why Bitcoin just kind of hung. I think the dollar weakening also helped Bitcoin. It is the denominator of the value of Bitcoin, so there's some value to that. But I think when you see major market decoupling, the names that are going to get hit the hardest are the ones where managers can raise the most cash quickly, meet margin calls, and be able to sort of rebalance their portfolio, which is what I think we saw over the last few days.
Excellent perspective, guys. I think for me, one of the reasons I think this is incredibly important is just general risk management. Right? Why is this important? Capital managers are focused on managing risk of a portfolio. So if you're a capital manager and you have a portfolio of assets, you got 10,000 assets in there, they subscribe to the concept of Markowitz modern portfolio theory, right? And Markowitz modern portfolio theory is the mathematical equation of diversification, which states that if you add a new portfolio to a new risk to a diversified portfolio of assets that's got different risk-return characteristics, it will increase the return and reduce the risk of the entire portfolio. So now you've got this new asset coming on the scene where you've got a single day or a couple of days of non-correlated performance. And now you start to look at that asset and say, wait, I need exposure to this. I need exposure to this asset primarily for risk management of my portfolio. So why is it important? Insurance companies, pension funds, banks, companies that are managing capital, hedge funds, et cetera, all are considering these things at the same time. So it's a really big deal. Last week was Bitcoiners were really excited last week because of the performance on Friday. So interesting topic.
I'm probably not the best one to opine on diversification. 120% of our balance sheet's in Bitcoin. So.
And I don't think Warren Buffett would agree with you either.
Yeah, right. Yeah, that's fair. That's fair. That's fair. Well, okay, so we've got a bit more time here. So my next question is, how are corporations accelerating Bitcoin adoption? I mean, what are we doing? What are we doing here, right? You have this general concept of, okay, you've got a profitable business and I take the profit and I buy Bitcoin, but it's more than that. It's more advanced than that. And I think everybody on this panel is experiencing that. So maybe I'll kick it over to you, Dylan.
Yeah, well, I guess just a quick background. I joined a Tokyo-listed company last year, a year ago today, or this week. They adopted a Bitcoin standard. It was, by all means, a zombie company, following in the steps of strategy. We had, there's about 8,000 to 10,000 shareholders back then, mostly penny stock investors. Today we have more than 50,000 investors, and those are just Japanese retail. And then along with a bunch of institutional allocators who tell us we can't buy Bitcoin, there's nothing in Japan, we have never owned Bitcoin. A lot of the portfolio managers have never owned it themselves, but they're allocating tens of millions of dollars to our Bitcoin treasury company on a Bitcoin standard because of the general thesis, because of what we believe and what we say we're going to do going forward. We're not going to sell it. We're not going to own any crypto. It's a Bitcoin-only, Bitcoin-first strategy. So we've had a lot of retail investors and institutional investors who, my thought going in was we're going to get Bitcoiners in positions of financial allocators or retail investors that want to own our stock. What we've seen is that there's actually just people that have never owned Bitcoin, that are stock investors or portfolio managers that are now getting onboarded to Bitcoin because they've had exposure to our story. So it's pretty exciting in that sense, and it was not something that I foresaw.
Yeah, I don't have a lot to add to that. Ironically or coincidentally, we were doing this kind of at the exact same time, not knowing each other. We were basically planning ahead, in April for a May purchase of Bitcoin or a May announcement, and it's just kind of coincidental. So we have some cosmic connection, I think. So I agree with everything you said, and I think one of the great surprises of this is just that, going from being a zombie to, like I said, kind of like an awakened soul, and being able to like be vibrant and I think that a lot of that is spurred by the shareholder base. I think all of us at Semler Scientific are blown away by the enthusiasm and the kind of this it's almost like a cheerleading type of aspect, which is great, and you just want to make everybody happy as much as you can, and you don't get that kind of feedback when you're just a healthcare company and you don't hear from your investors too often. It's not really clear. Some guys want you to return cash, others want you to grow, and you're not really sure. This is very kind of like a unified strategy, and it's beautiful, and you kind of want to win for everybody involved, not just yourself.
Yeah.
I think for us specifically at Fidelity, and again, we've been involved in the space for a number of years. It's just been, consistently building products and services to meet our customers across the wide range of spectrum of investors from retail all the way up to institutional who are interested in Bitcoin and want to interact with it in some capacity, and also ensuring that we take a very educated tone to conversations we have with these particular investors. Some show up to us and are really eager to engage with Bitcoin in some capacity, which is great. Others also show up and are deeply skeptical, and we're trying to play a small role in lending some degree of credibility to the technology into the asset, and we're really excited about what we've done thus far on that front.
I don't know if I have much to add. I mean, I think what Dylan and what Eric have done is very creative and very kind of forward-thinking, and I commend them for that. So, from our point of view, we're just a technology company trying to accumulate as much Bitcoin as we can. And if the capital markets are open and people want to lend us money at 0% interest with a 40% premium on our stock, we'll use that for corporate purposes. We'll buy better mining machines. We'll buy energy assets, and we'll buy Bitcoin in the market, when we think that that's where we'll get our best return.
Excellent perspective, guys. And you all hit on this general theme of new investors in this retail community. There's this evolving retail landscape that's becoming increasingly more important as the world changes, right? The investing landscape changes. And it's almost like when you announce a Bitcoin treasury strategy, there's this jolt, right? You get this jolt of electricity to your balance sheet, and it's via retail shareholder base, it's via hedge funds that are interested in the volatility, and I think the world hasn't quite grasped or doesn't quite understand the value that jolt can bring to a balance sheet. So it's really interesting seeing this evolve. I mean, just Metaplanet, right? A year ago, the Metaplanet general meeting had 100 people, and this
10.
It had 10 people.
10.
And you just had your annual meeting, and there were 1,000 people, and there were people waiting out the door, lined up out the door to hear you guys speak, right?
Yeah. I think, on that point, the beauty of Bitcoin is, you have this $2 trillion open source marketing team. Semler buys Bitcoin, and I'm cheering him on. It's not like, and Sailor's reposting, Metaplanet and posting you doing your stream, and you had 0 Twitter followers a year ago, and now have I don't know how many tens of thousands, just being on the orange team, right? And so that's something that I think is completely unique here, is that there's an open source community globally that's cheering everybody on, and there's economics there, but it's just this one mission to deliver Bitcoin to the world.
But it is super intimidating because I am not a social media person. I'm really an introvert, so I suck at the soundbite, and I can't cater to that crowd very easily. So I'm trying to hopefully forge a way for introverts to actually work, on social media. I don't know if that's a oxymoron, but it's actually very intimidating.
But I mean, as Dylan mentioned, right, it is a zero-sum game, right? Everybody's on the same team, which is just incredibly exciting. And in the world of TradFi, it just doesn't feel right, right? Yeah. Having a TradFi background, it doesn't it seems too good to be true that everybody's on the same team and going in the same direction. So fascinating stuff, guys. Okay, last question. We've got a few more minutes, and maybe we'll take a question or two if we got time. So, right, many of you guys are in very important positions at your companies. You speak with CEOs, CFOs, and many of them probably think you're crazy, right? And I hear it all the time when I go talk to people in high finance. Many people laughed at me for a continuous amount of time, and they still do, yeah. So my question here is, where are we headed, and how is this evolving? How is this landscape evolving, and where are we going to be 5 years from now? Maybe Paul, we'll start with you.
Where will we be 5 years from now? God, in Bitcoin, it's hard to say, but I think the secret is out about Bitcoin. I think the fact that it is the only asset in the world that can't be diluted is incredibly valuable. Every other asset, as the price of it increases, the supply of it increases. Everything from real estate to gold, to corporate profits, to stocks, to bonds, except for Bitcoin. Bitcoin is a fixed supply, and it's going to be more and more seen as a true treasury asset, one that can protect the company from the volatility that we see in just corporate America. So I think it's going to be something that every company is going to need to own to be able to compete, and that's only going to push prices higher.
I guess from our perspective at Fidelity, having been involved in the space for a number of years, we've seen ebbs and flows in the Bitcoin market. And what we found is, if you have a long-term vision that this is a potentially valuable technology that our customers across the gamut of investor spectrum types potentially want to interact with, just being consistent and continuing to build products and services and taking a very educated tone in the marketplace. And within the traditional financial world, there are still certainly pockets that have skepticism or a negative stigma towards Bitcoin. And the way we try to combat that at Fidelity is just showing up every day, being consistent, and being very educative in the content we're sharing around this topic.
I don't have anything more to add to that. I think that's great. Right. I don't want to take anybody else's time.
Yeah, we can turn to the audience.
Yeah, well, just one last thing on that point here is, like, where are we headed, right? Bitcoin itself is pristine collateral, right? It is globally liquid, 24/7, 365. It's transparent, right? If somebody's holding it, you can have a lens into the collateral at any point in time, which I think the evolution of that collateralized finance space is going to explode over the next 10 to 15 years, which is beyond comprehension of the existing financial marketplace. Just to put this in perspective, my background is in reinsurance, so insurance for insurance companies. And collateralized reinsurance in that marketplace has gone from $30 billion to $100 billion in the last 10 years. And they don't use Bitcoin at all. And a lot of that collateral is LOCs or energy assets or those kinds of things. And that's just one marketplace where we can see the evolution of collateral. And I mean, many of the folks on the panel here and following its strategy are starting to understand that the collateral landscape is also evolving as well. And you have this transformer of the corporate balance sheet where you can transform the Bitcoin held on balance sheet into different types of assets that are held by the market, being preferred stock, convertible bonds that have different volatility metrics, different risk return metrics, but are correlated and directionally going the same direction as Bitcoin. And the evolution of that space is going to expand drastically over time. So I'm incredibly excited about that. I think that's where I think we're going over the next five years is folks are going to understand the value of the corporate balance sheet being the transformer of this collateral, this brilliant collateral.
The point I would add there is that I think the beauty of the Bitcoin treasury model, or just Bitcoin on the corporate balance sheet, is traditionally investment cycles are 1 year, 5 years, 10 years. Metaplanet formerly was in budget hotels, so they would raise capital, 3-year plan, architect, city planners, they'd build the thing, and then it's another 5 to 10 years to see if it generated a return. Now we raise $40 million on a Monday. We get the cash, we wire it to the exchange, we buy the Bitcoin, and we announce it on Tuesday morning. and then we have proof of reserves that our Bitcoin's on chain, we say we have it. And so like the investment cycle for us is like under 24 hours. And we do it again and again and again and again. And the strategy is buys Bitcoin every week for 4 years. So it's, I think that can't be understated where, for us, we're telling our shareholders, we're not even, yes, we want to buy Bitcoin lower than higher, but our internal calculus is not BTC USD. It's not the exchange rate. Our internal calculus is Bitcoin per share. Like we denominate all our economic calculation in Bitcoin. So on a Monday, we raise the capital, we buy Bitcoin, and we say, hey, that was a 3% increase in shareholder value in Bitcoin terms. And I think that model and the transparency of the model and the, just how rapid it is there's no comparison. There's no comparison anywhere in finance.
I think also that something that is a real lightning rod issue in the stock market now is this issue of the Bitcoin premium. What should you trade? What premium should you trade at, if at all? And I think there's so much negativity around that, just among traditional investors, especially hedge funds, who are short our stocks. And I think that's such an interesting question and debate. And I think part of it is tied to how much value you can add. And I think it's also something that it's been shrinking, frankly. I mean, the MNAV has been shrinking for the most part. And I think it's partly because there's a lot of people that don't understand what's really going on here. Like, they don't even know that, for the most part, a lot of investment funds in the US can't own Bitcoin, or they can't own the ETFs. Like, there's just that little small fact is pretty valuable in terms of determining if there should be a premium or not. Leverage obviously is one too. So there's stuff that people don't understand. It doesn't make any sense to them. Why wouldn't I just buy the ETF? Why wouldn't I just buy spot Bitcoin? And it's more sophisticated than that. And so I think that issue, by the way, is probably those guys are winning a little bit right now, the naysayers. And I think that's slightly repelling corporations from adopting Bitcoin. Like, they kind of still view us as like having like some kind of disease, and I think that there's just not enough companies that are going to make the leap because it's still viewed as a bit kind of like too experimental.
Right. The valuation conundrum is huge, right? And we're going to see like that continue to oscillate, right? The bulls will win for a while, the bears will win.
Just
for
the
a while.
concept of diluting your equity to buy Bitcoin it just doesn't make sense to, I'd say, 99% of the people who invest in the stock market.
Yeah, it's accretion.
Right. It's accretion, sure.
It's accretion, right?
99% of institutional investors don't believe that.
Yeah, how do you value something in fiat dollars when the company itself is valuing itself in Bitcoin? You've got two different measuring sticks, and they're colliding at the same time.
A counterpoint to that is, and that's like 90% of our conversation with traditional investors is, you're diluting, and we don't do companies that do that. We stay away, and that makes sense, right? The Buffett school of investing or whatnot. The counterpoint is, like, one of our largest investors is after we spent 6 months, 9 months with them explaining the model and how we think and how we internally make decisions and our long-term strategy, they're coming up to us and saying, hey, we can only own X% of your company. When are you going to issue more stock? We want to buy more. So like every time we issue shares to buy Bitcoin, and traditionally you own less of the stock, but you own more Bitcoin per share, they're going into the market and buying again. And so I think that's again, we have a big, huge investor that's saying, can you please actually dilute our ownership? We want you to buy more Bitcoin as fast as you possibly can. And that's not something I would have seen going into this. But I think that's a cutting edge of people that understand this sort of framework and I think where the world's headed. Denominating in Bitcoin terms.
Right. Well, I think we're right about time.
Yeah, so we have 4 minutes for questions.
4 minutes, yeah, if we want to get a question or two, yeah.
Hi, thank you guys for coming and sort of explaining the motivation and excitement around this. The question I have really is for Eric, and it's on governance. I'm trying to think if there's I'm trying to think of maybe not the end game, but the late stage of this, right? Is you have this big treasury, very valuable, and do you have like a corporate analog in the world? Like there's one company in South Africa that bought a lot of Tencent, right? And they're worth hundreds of billions, and now they're trying to figure out what to do with that. Do you have a corporate model or inspiration in terms of governance for the long term.
What do you mean by governance exactly?
In terms of how you're going to deal with managing a huge treasury, what are your internal thresholds for distributing capital, benchmarking?
Yeah.
Because it's a bit non-traditional. There's not that many companies that are just holding one asset and sort of.
Right. So I mean, we'll just for just for working capital stuff, we're always going to have U.S. dollars cash on our balance sheet first of all. So we look ahead and see what we need and make sure we have sufficient dollar reserves. But the primary asset reserve will be Bitcoin. I think that's a great question. I think a lot about what, like in 5 years, 10 years, we're going to hopefully have a lot more Bitcoin, and what will we do with it? I suspect, I'm guessing, is that it will become the Bitcoin will become kind of owned by everybody, and especially money center banks and lenders of last resort, and that it will be it will become much more fluid, and we'll have optionality in terms of lending our Bitcoin out if we need to. It'll be safer and not something we have to worry about, and it could potentially be a great income generating concept. But I guess over time we'll become more of we'll be like a bank. I guess we'll be like a Bitcoin bank to some degree, but that's really far away. Right now we're just kind of in like the accumulation, hodling phase. I suspect that's going to last for a while.
Thank you.
Sure. Thank you.
Thanks.
Go ahead. So, can you guys hear me?
Well, probably I can ask a question. So I have a question about, curious about custody. So I know you guys hold Bitcoin, understand Bitcoin, right? But in the custody side, does companies hold the Bitcoin, or they use a third party? And if you use a third party, if there a third party risk, have you thought about that? And obviously, having Bitcoin in self-custody probably doesn't unlock financial products like loans, etc. So what are your thoughts on that? And also, obviously, if you want to introduce new corporations into Bitcoin, probably there is a lot of friction in self-custody, and that's where these other products come.
Yeah, Paul,
I could talk to custody. So we have about 47,000 Bitcoin on our balance sheet, and we would never self-custody that much Bitcoin. Also, we need to, since we're a public company, we need to be able to be audited externally. So we need to be able to allow our auditors to see through to our Bitcoin holdings. And the only way we can do that is by hiring third-party custodial companies. So we use 5 companies right now. We're a client of Fidelity. That's one of them. And we want to diversify amongst our custodial relationships. Also is a good way to help keep fees down. We have to talk about that, by the way. And it's just like anything else. If you have a large cash treasury, you probably want to diversify among different banks so that you don't end up in Silicon Valley Bank and with your money stuck. So that's one of the things that we're always trying to do. We're trying to manage our custody relationships, making sure that the Bitcoin is safe and is able to be audited by a third party.
And there's also a custody provider in the room that is doing insurance on the Bitcoin custody. So that landscape is evolving.
Anchor Watch.
Yeah, Anchor Watch.
So they beat me on the custody question. It was the same question. Specifically, I wanted to ask about the risk, right? I know Strategy is doing a lot of work with, they say they hold everything on Coinbase. So isn't there a lot of risk if everything is sitting on Coinbase, and I think Fidelity is doing their own? And then the risk of 6102 potentially, and BlackRock potentially buying 5% of MicroStrategy, where does this all lead us in the future?
Well, not to speak for Strategy, but I believe that there's a diversity of custodians. It's not all just on a Coinbase wallet. Yeah, but I mean, even if you look at the cap table of Strategy or IBIT, there's a lot of different stakeholders here. It's not just unilateral. I think the ultimate left tail risk, the 6102 event or something along those lines, I think a lot of that left tail risk got chopped off 6 months ago, with the election. I think certainly there's an argument and a longer discussion to be had on, is there's too much concentration of Bitcoin or mining or infrastructure custodians in the U.S. That's a conversation to have. But I think as a public company, and even like someone like myself who loves the cypherpunk ethos of Bitcoin and the decentralization and self-custody yourself, absolutely. But for a public company, who's all flying on the same plane to travel, or you can just, it's not feasible. So yeah, I don't know if anyone else has anything to add there.
I mean, with the repeal of SAB 121 and the development of SAB 122, and you're going to have significant competition between global, too big to fail, systemically large banks that are going to be, fighting to custody Bitcoin, and you're going to have, hundreds of different custody solutions that are going to be popping up in the future, and it's going to be with J.P. Morgan, Citibank, right, BNY Mellon, all of these companies that are systemically tied to, the existing financial system.
Okay, unfortunately, that's all the time we have for this session. Thanks for this engaging discussion.